Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain comment for Tuesday, August 5th, 2025. First of all, crop conditions came out yesterday, really didn't move the needle. Corn was 70%, 73% good to excellent. The trade had guessed 72%. We had been 73% a week ago, 67% a year ago. Corn, 88% were silking, 76% a week ago, 86% a year ago, and the average is 89%. 42% doing, that's 26% a week ago versus 44% a year ago. The average is 40%, so we're right there. And 6% dented, which is the average. Soybeans, 69% good to excellent. It was 70% a week ago, so a little dip there. 68% a year ago. 85% are blooming. It was 76% a week ago, 85% a year ago, and the average is 86. So we're right on target there. 58% were set in pods. That was versus 41% last week and 57 this time last year. The average is 58. So nothing very uh, challenging there. Nothing very earth shattering. Look at cotton, 55% setting bowls, 44% a week ago versus 59% a year ago, 58% average. So cotton's a little bit behind. Spring wheat, 48% good to excellent. The trade was looking for 49%. We were 49% a week ago, so a little dip there. 74% was where we were last year this time. We are 5% harvested. The trade had thought we'd be at 7%. We were at 1% last week. So as harvest goes on, we're a little bit behind schedule there. The average for this year's time of year is 9%. Winter wheat, 86% harvested. The trade had looked for 88%. And we're right on average there. So again, nothing very shocking in the crop conditions, and the prices reflected that overnight. Dees corn made a new contract low, 403 and a quarter. We're trading 405 and a half last, down a penny and a half. I can't imagine we've come all this way to not get a $4 print and then also run the stops, the sell stops that are under $4. So the first time we get that 399 print, it could be kind of interesting. November soybeans, we had a pretty good range last night, 9.89 and a half to $10, 11 cents. We're up 4.5 cents. I don't put a lot of faith in the overnight bean trade, but we'll see if we can carve out there. We did have good exports yesterday. That was the one bright spot in the news cycle yesterday. And sadly for wheat, Chicago wheat down 3 cents. December wheat trading 5.33 3/4. Kansas City Dees wheat down 4 3/4. Traded as low as 5.30 3/4. So both Dees wheats, Kansas City and Chicago, it looks like they're going to make a run down at 5.25. See if that holds. Again, the overnight low in December, Kansas City was 5.30 3/4. The low in Chicago Dees was 5.32 1/4. If you're a producer, if you've been working with me, you certainly had every opportunity to get some sort of a hedge when we were higher. And we have been rolling those puts down as we watch this market slide off. And finally, Dees Minneapolis trading 5.97. They had a low last night of 5.94. $6 is going to be a big psychological fighting level there for Dees Minneapolis. It is basically contract lows. You got to remember, on July 3rd, we were at 673. So, a 75-cent drop since the 4th of July. It's nothing that anybody wanted to see. So it continues to be a tough slug for the wheat market. And today, based on the action that we saw in the cattle yesterday, I think everybody's looking at, well, is the top in? We've been playing this game now for 4.5 years. It's been a tremendous bull market. So the level I would look at, October fats, 230. 230.5, and that's what everybody's probably going to be short at here. We settled at 224, so there's probably 5 to 6 cents worth of risk if we run back higher again. Obviously, it's been a while since we've had a nice, really a serious correction, anything more than a few percentage points. It's been an incredible rally. Even if you don't have anything on right now, 224 fat cattle is pretty darn good, and the puts are cheap. If you look at September feeder cattle, what's the level I'd be watching there? Well, we finished the day a little bit higher yesterday, but people are going to be short against 331 half. We settled at excuse me, 341 half, 341 half. We settled at 334 half. So there's $6 there that, we may go explore and see if we can take that out. If we don't, it's always been a question is when and if the funds would take profits on their massive longs that they've had here. They've made a ton of money. So at some point, they're going to want to lock those in. However, we've been looking for a big correction for a while, which has not come. The cash market continues to stay strong. A cutout slipped a little bit last week, but in general, the American consumer continues to show up to buy $14, $15 beef at the grocery store, $15 a pound beef. It's impressive. And lastly, the hogs, lean hogs. If you're looking at October, which is kind of what I'm focused on now more than August, October hogs, I think we're going to be in this little trading range between 88 and 92. Don't want to get caught without a floor there because if they do decide to press the sell button in the protein complex, the first thing that will go will be lean hogs. So have a good day. This is Chris Robinson. If you need help, give me a call, 312-638-8868. Robinson Ag Marketing. We'll be back this afternoon with the afternoon update. Have a great day.